Hey traders, Chris Pulver here with Market Traders Institute, and welcome to the Weekly Outlook. It is the week of September 16th through September 20th, 2019. Let's go ahead and dive into the live markets here. First, we'll start off with the economic calendar. First, we had some breaking news over the weekend that there was a drone strike in Saudi oil fields, and we saw huge gaps in the Forex market, big gaps in oil. A lot of volatility to start the week off on Sunday as the market looks ahead and all eyes on the Fed or the FOMC on Wednesday afternoon. That's at 2 p.m. We also have a labor strike for General Motors, the first labor strike in over 10 years. So what seemed, this is actually the SPY or the SPY, what seemed to be just a nice cruise run back up towards the highs in July, which another poke at historical highs is not too bad. With some easing tensions between U.S. and China, looking like there was a delay in tariffs from October 1st to October 15th. There's going to be unknown negotiations resuming between U.S. and China, and the market was using this as an excuse to rally as we survived that little drop in late July, early August. But volatility has gone nowhere, and you see that the market is still a little bit jumpy. So like I said, drone strike in Saudi Arabia, and looks like we have some rebels that are taking credit for it. Some say it's Iran. Doesn't really matter. We've seen a big jump in oil because of that. So take a look at U.S. oil along with others and look at that daily candle. Yikes. Now, based on where this closes, I've been watching this level on oil for the last couple of months. We have a major resistance point at 60, a major support point at 50. So price, although that's obviously a massive move, I mean, you don't see candles like this every day on oil. That is 54.75, give or take a few cents on the low, and a spike all the way up to 63 and change. If you go down to a smaller time frame, take a look here on the 1 hour chart. So just a massive move and relatively inefficient. It will be interesting to see what the continued price gives us. We might see this low high where it started the breakout right there. This might just work its way back down into that same level, and this is nothing more than a big volatility fake out, and $60 remains resistance. So I think what's important is that we keep a close eye on $60 and $50. Based on the larger time frames, this structure has not broken. So what am I looking for? Well, if we break and close higher, which looks something like this, let's say that we have the long wick to the north and price stays confined over the next few days. Well, if we end up seeing a daily candle closing higher, then I would look to be long. If we stay in here, then this is range trading. You want to sell high, take profit, buy low, take profit, sell high, and you play the range. If we break back below $50, well, now we're going towards $45 or $43. So it's still stuck in a range. We can see that pretty clearly, but a lot of volatility kick off the weekend, and we'll see what happens this week. Again, all eyes are on the Fed. Let's go to the economic calendar. So we have Tuesday, medium impact for the German ZEW report, that's ZEW. CPI news coming from the pound on Wednesday. The pound's had a pretty nice recovery over the last 2 or 3 weeks. Anybody that's been position trading or leveling into pound crosses, I certainly hope it's offered up pips and profits on some of those recoveries to get the heck out of those trades, hold some of those trades, ride those profits out, but I wouldn't necessarily be looking to hold on to long-term runs on pound crosses, especially over continued volatility in the next couple of months. We'll find out a lot more when it comes to middle and end of October with regards to Brexit. Wednesday is going to be a big day. We have I believe, a quadruple header of rate decisions this week. If I'm not mistaken, we have, and I'll just type this up, we have the dollar, we have the JPY, we have the Swiss, and we have the pound. All have rate decisions this week. Now, the big news is the dollar because they're expecting a cut. This would be a 0.25% cut, and that would bring the dollar down to 2%. The JPY is likely going to remain the same at negative 0.1. The Swiss is expected to remain the same at negative 0.75, and the pound also expected to remain the same at 0.75. So the dollar is a big one because we're looking at a rate cut. We're going to take a look at the dollar index, and you'll see that the price action has been pretty supportive, and the dollar remains quite firm and resilient. And of course, that can change very quickly. If we have more risk appetite, we'll see a weaker dollar, weaker Swiss franc, and weaker Japanese yen. But that is not convincing at this time. And of course, with just the rate cut that's expected on Wednesday, it really is about what is Jerome Powell going to say. Is the Fed expecting to see another rate cut this year? Is it going to be immediately in October? Is it going to be in December? What's the market going to be prepared for? We're going to look at some major levels on the dollar index to see where we could start noticing some significant tops or bottoms and see if we can get some confirmation and trends kicking in on dollar pairs, especially when it comes to weakness. So throw all that on a Wednesday and you roll right into a busy Thursday. You have New Zealand GDP numbers, you have Aussie employment news, you have a Bank of Japan press conference and policy statement along with their rate decision. That's Thursday morning during the Asia session. Swiss National Bank monetary policy assessment and rate decision. Again, those remaining unchanged at negative deposit rate territories. Pound, we have a super Thursday for the pound. It is 4:30 a.m. retail sales, 7 a.m. with bank rate decision, asset purchase facility, and monetary policy committee voting. Most likely will remain unchanged. In fact, it's probably very likely to remain unchanged, but nice little driving factors for some volatility on Thursday out of the pound, and then finish the week off with CAD retail sales. So it's a bit of a mouthful. If I just go into the high impact news, you're going to see it's a pretty busy calendar. So that's a decent calendar, and again, all eyes on the Fed on Wednesday. So here is oil. Watch your levels. If this is just going to be a big structural candle, watch for a firm breakout above 60, watch for breakout below 50 until those levels break. Then stay in between them, right? If you're an active futures trader, if you're an active oil trader, then look for this volatility to remain. I'm sure oil will provide plenty of opportunity to buy low, sell high. Once we have an official breakout, look left, there's a target. Look left, there's a target. So if we're breaking south, we're looking towards 42. If we're breaking north, we're looking towards 66 or higher. Alrighty, let's go into the dollar index. Dollar index, like I said, the dollar remains somewhat firm. Previous resistance does offer and is holding as support for now. Now, could this change this week? Possibly. We'll find out. I think with this yellow box, this structure to me is resistance. If we break that resistance and we start coming back down into this yellow box, it really needs to get towards 12,250. This is US dollar. Okay, US dollar. If we break below 12,250, I'm a little bit more of a believer. Okay, that's not believer. That's believer that we've got price that wants to continue to fall on the dollar index. Start out with the base of this wedge, the base of this consolidation. That's an easy target to come down towards. And we have a yearly pivot sitting right there at 12,032. So from 12,250 to, let's just call it 12,000. That's 250 points on the dollar index. Let's say that translates into at least a pip on every currency pair. Well, you're looking at 1,000 pips across the board for the dollar index. If it's a pip and a half or 2 pips, if we have decent volatility, we'll see more than that. So if we can get a decent break, I would love to see more trends here for the next maybe 2 to 3 weeks. It's a good thing that it's an early rate decision, because when we had July's rate decision, it was literally the last day of the month. It was July 31st. So now that we have one on the 18th, we at least have the rest of the month. We can see some decent flows and movement based on the dollar. Now, if it doesn't break down at all, just because the Fed's cutting rates does not mean it's a guarantee the dollar's going down. This dollar could still shoot up towards these highs, score a point for the bulls, and then just come right back down. All right, so we do have to be careful, or just watch this structure. If this ends up drifting slowly heading into Wednesday, don't be surprised to see the bulls take this back up. Even if they cut rates. You know, it's like everybody wants to see a weaker dollar. I get it, but right now it might be a crowded trade. Maybe dollar long is the not so crowded trade, you know, but it seems to be a good trade for right now until structure proves otherwise. So that's kind of what I'm going to be watching. If interested, you can reach out and let me know if you'd like to join for a live session. I have a live session Wednesday afternoon. Here's some ways to get a hold of me. This is Instagram, Twitter, Facebook, YouTube, and my email, cpulver@markettraders.com. Running a webinar at 2 p.m. on Wednesday for FOMC. So make sure, some of you that are in my classes already, I'll send out emails in your documents, and in the online university, you can have the email to join us on Wednesday at 2 p.m. And I believe I'm doing that with Gary Fickhart. We're going to be tag teaming that at 2 p.m. Eastern time. So it'll be a lot of fun. Hopefully we make a few pips, get some volatility out of the dollar pairs. So now let's head back into the Aussie CAD. Let's do some other currency pairs. And I'll get into gold, silver, and Bitcoin as well in just a little bit. Aussie CAD ended up finding our first target at 9,100. I'm just hanging on to this trade for right now. So let me delete some of these green lines. We've just made a nice break of the trend line. Double bottoms or equal lows around 8,900. We're back up towards 91. I'm looking to hang on to this trade up towards 9,250, which is this previous high. Nice little green box area, safe and conservative, right before we hit this trend line around 93. So anything around 9,250 to 9,300, we're going to be protecting some buy trades. Aussie Swiss also holding long on this one. If this one pulls back to 66.80, I'm buying it again. If it falls back down to 65.60, I'm buying it again. So I'm looking for a chance to buy low after already holding some positions. So I'm currently long and in profit on this Aussie Swiss, looking to get back to the same thing. Look at your trend line, look at your conservative spot, look at a previous high. Anything around 69.50 to 7,000, I will be trapping some profit. If I get another opportunity to buy a dip or buy a pullback, I will do that and add to this trade. Still taking profit between 69.50 and 70.50. That is Aussie Swiss. Aussie Yen, similar. Previous structures broken out. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 daily candles in a row to the upside. Now we're starting to get a little bit of a retracement. That is totally fine and welcomed. Why? Because it's healthy. So if this goes up with this little rally and corrects back down towards previous highs, that's around 7,300. 73.00. Look for a chance to buy. Look for a trend line break. Look for your systems to give you some bullish signs. You can put some stop losses there inside the range. See if this resistance becomes support. And then from there, we're looking for another push to the upside. So I'm looking for Aussie Yen to stay bullish. And hopefully we get another opportunity to jump in there. Aussie dollar. We ended up getting up towards 6,900, but not quite there. We're still looking at 69.21 is the level that I'm looking for. Trying to get a candle there. There you go. Close is 6,864. High is 6,893. So about 30 pips off of this little pivot cluster that I've been watching since the break back in July. And again, what are we looking for? If we just pull back into this area, could this be a brief pullback and then a push into the yellow box? Maybe. Could we pull back into equal lows? Maybe. I'm still a buyer on the Aussie dollar. All right. I want to be long on Aussie dollar. And again, I'm looking for good levels. I'm still trying to hang on to a couple of positions that were patiently awaited down here. They are in profit right now. If we end up going towards 69.20, I'll probably close. If they come down a little bit lower, I'll be looking for a chance to buy, try to take it to the outer channel. And ideally, let's say 3 to 6 months from now, if we see price in this open space above 69.50 or above 7,000, I want to be long and staying long on the Aussie dollar. If we zoom out in this chart, this is a daily chart. If you zoom out, you can see the structure is holding quite nicely as a channel. We've also been in a downtrend literally since February of last year. This is a high in January, February of 2018. It has been a nonstop downtrend since. So even if we see equal lows holding and we have a corrective move, something like that is enough to get us back towards 72 to 7,300. There's plenty of pips to be made with lows around 6,800. So that's what I'm looking for on the Aussie dollar. CAD Swiss, we ended up taking some profit on this one last week. So nice work to everyone that was holding on to this from 73.70. We had some positions in. Profits between 7,500. We had highs around 75.60. We were looking for 7,600. It didn't quite get us there, but we wanted to protect, and we did. A lot of traders walked away here with 120 to 150 pips, depending on where you got out. But still, if we get a chance to buy it low, we're going to keep buying this pair low. So right now I've got a pending order there, pending order there. I'm just going to keep looking to buy this nice and low and trade this range. If you look at this overall area, the structure is actually quite clean. So take a look here. Nice level support, tons of support over here. So basically, if we just come into this zone from here down, I'm only interested in buying the CAD Swiss, and I'll stay with the structure for profits as a buyer, but ideally trying to take this a little bit more medium term, long term, up to 8,000. That's a nice round number. That's also a large inefficiency on a monthly and weekly chart. So the lower I can buy it, the better it is, the longer I get to hang on to it. But I'm still looking to focus on buying only for the CAD Swiss. CAD Yen. CAD Yen, similar to Aussie Yen. We had a nice little rally to the upside for several days in a row. We're getting a pullback towards 8,100. Anything around 81, keep an eye on this. Look, something around 8,100, look for a little bounce, look for rally. Try to keep those stop losses fairly tight. Look for some consolidation and some systems to give you some decent bullishness on a smaller time frame. Say a 1 hour chart, look for some bullishness. Again, respect the support resistance levels. Previous highs that were resistance can also become future support. So this would be a bounce in there, hopefully, with stop loss areas inside this range, and we're going towards new highs or previous highs. So new highs would be right here. Previous highs would be right here. That's anywhere from 8,200 all the way up towards 8,300. And we're looking at a buy trade around 81. So a few hundred pips to go after on the CAD Yen if we get price to cooperate with some decent support coming up here. Let's see here. Swiss yen. This is one that I'm probably going to stay away from. It's safe haven versus safe haven. Also, we have both banks, Swiss and JPY, will be having rate decisions this week. Nothing is expected to change, but I'm not going to jump in here and say which safe haven is the better of the two, which one is the worst of the two. I really don't care. I'll trade this one at another point in time. Euro yen. Actually, let's go Euro Aussie. I'm skipping around. Euro Aussie. Euro Aussie. Really, it played out on this rising wedge beautifully. Really interested in this one. Medium term to long term. Here's why. If we get into this open space to the downside, let's see what happens. If it falls into this territory, any type of pullback, we can look to sell this. All right. If we somehow have one more jump to the upside, which I don't necessarily see happening. I mean, that'd be great if it did, but I don't necessarily see that happening based on Draghi and the ECB last week. It was it might have actually been his last press conference, and we saw a ton of volatility on the euro last week. I was running a live session, was fortunate to grab some pips. Now, what's funny is I actually grabbed my pips to the downside, about 20, 30 pips respectively on most of the euro pairs, ended up walking with 80 pips in the morning. And then if you just let your trades run and you had some systems that were short-term based, I mean, this was straight down for an entire daily trading range and then straight up and then some. You know, it was just a wild, wild, wild day. Take a look at this movement. Overall, we had straight down for 174 pips. And then we proceeded straight up for 200 plus pips. In fact, the high on Friday of last week was a bottom on Thursday to a high on Friday for 259 pips. So what a wild swing that was. But again, look at the higher time frame. This is why we plan on larger time frames. Here's your daily chart. So I hope it's pretty straightforward to see that if we break into this open space, we should be selling. If it's going to be more range bound, we can stay within the range. Just be careful on those entries. I'm a fan of selling this. If we somehow come all the way back up here, I will happily re-enter and short it. Try to hold this down to target 1. Try to hold on to it for a lot longer than that if we get into this open space. So the higher the better as far as the seller goes. If the structure ends up breaking into this space, look for opportunities to sell pullbacks and retracements. Look for bear systems to go south, obviously, and you're looking for systems that will give you alignments to take sell trades all the way down towards, conservatively speaking, I would just go into this resistance and support area around 5,300. But I really like, honestly going all the way back down towards 3,800. 4,000 is a round number. So there's just tons of opportunity. If we break this open space, tons of opportunity to sell. We're talking 5,900 down to 4,000. That's 1,900 pips. Plenty of opportunity to be a seller. EuroCAD. EuroCAD. Going to leave this one alone for now. Ridiculous volatility on the EuroCAD at this time. I did have some robots that closed up from profit from this support level to resistance level. That was a nice little trade. Now it's actually selling. So I've got a robot that's just running with this range. So it was buying low. It's selling high now. And we'll see if this just comes back down to score point around 4,500. And once we eventually make our minds up, we're either going to continue to take this channel lower, 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 lower. But I do see a jump coming to the upside back towards 52. So as far as waiting to get in, right now this is going to be more automated trading inside the consolidation. But once this breaks to the open spot, that would be trend trading and going after a breakout towards 52. But be patient on that. This pair is highly volatile, but also highly efficient. Euro Swiss. I'm still holding some long positions on the Euro Swiss. We had a nice Thursday candle that showed a promising wick to the south. I think even if we come back down to this wick again, or double bottoms, or even 10700. These are all levels I'm interested in buying the Euro Swiss back towards 1100. Even if that's a correction, I've basically acquired positions, nice and small, nice and conservative, but have built up a position around 1.10, 1.09. And if I get back to 1100, I'll grab some pips. But I think medium term, long term, the Swiss National Bank, although it could be problematic for the ECB to be wanting to cut and want to stay more dovish, the Swiss National Bank is also potentially considering a rate cut into deeper negative territory. We'll see what happens on Thursday if they reveal any of that, or even if they foreshadow it in the next few months or the next big meetings. But Euro Swiss, I'm looking to stay long. Euro Pound. Euro Pound, this is a spot just to get out. If we've been holding trades, which we were starting to sell with this consolidation. We started to sell on this little rally to the upside and also the break of the trend line. So we have successfully achieved some profit back down to a previous low. Take your money, protect your profit. Don't worry about this trade. This could just as easily run up again as come all the way down. We'll find out what happens with Brexit over the course of the next month, I mean, month and a half, we get into October 31st. Will Boris Johnson deliver on Brexit? Will Parliament stick to the guns and say if there's a no Brexit decision, we are not going to allow that to happen. There will be a delay, blah, blah, blah. And this Brexit stuff continues to go on for, 3+ years and nothing is done. So as frustrating as it may seem, the good thing is technically the pound is tradable. All right. I've been talking about, trading the volatility in the short term, not having a bunch of exposure on pound pairs and just looking to trade intraday. We've got active London daybreak strategies. We have active volatility in the London session, which is great. The pound pairs are on the move. But again, trying to limit some of that exposure. And I, for one, was more position trading on higher time frames. So I want to make sure that I was just closing and protecting. So euro pound, if you're in profit, protect it. Euro yen, lots of volatility. Still not officially up. Well, I'd say this. It's on the right side of this trend line, which is what we were watching. I was watching the structure here. One thing I would be watching for is if we pull back towards that Draghi low from Thursday, maybe that level holds. If we pull back into the backside of this little trend line and a double bottom, that's around 116. I think that'd be a fantastic spot to consider going long with a fairly tight stop area, right? I mean, if you look at this structure on the higher time frame, you're going to see a pretty clean channel. Resistance, support, resistance, support. That even includes a flash crash from January 2019. Resistance, support. So I'm looking for price patterns in here to build some lows and trade it back up to channel lows to channel highs. So that's what I'm watching for on the euro yen. I'm being very patient. I always am with yen pairs. Yen pairs, I need to have an exit plan because they can get irrational. I mean, all pairs have the tendency to become irrational at times, but the yen pair is notorious for that. So I'm looking for some good levels to buy low. We had some opportunities to get in long around 117 and change, take it up to 119, 120. But again, just be patient. I think the yen will offer it up. If the S&P 500 or the stock markets are going higher, if there's risk appetite, the JPY should continue to weaken. Euro New Zealand. This one is pretty similar to the Euro Aussie. It was like a perfect bounce here at 7,000 during Draghi on Thursday. We have since pulled back. I am watching for a chance to sell high once again. Resistance, resistance, resistance. That's right at 1.75 or 1.7550. I'll look to sell it there and take it back down to 7,000. We have some decent structure going on this way. A little bit of kind of a fake out breakout to the upside. Fake out breakout, I guess I'll call that. But you can see the wicks, right? Long wick to the upside, that was a news announcement. Long wick to the upside, that was also news announcement. And then you have a long wick to the downside, also news announcement. So that's what tends to happen with pairs that have high volatility. But as far as the overall structure goes, I still like this resistance holding. Resistance there, resistance there. So even if we respect this structure a little bit, trade within the range. Trade within the range. So if we hit the highs around 75, I'm going to sell that, keep the stop loss area fairly tight, try to go after 7,000 or lower on that Euro New Zealand. And if Euro Aussie is also selling off, that's a good trade to be short as well. Okay, Euro dollar, tons of volatility on this one. Good trading last week. The bears just continue to push down and try to score some points. We had an equal low last week. You can see this candle here is a low at 9.24 or 109.24. And the Draghi spike from the ECB rate decision, which again didn't change. It was just the policy assessment was looking for more dovishness. The low was 109.26. So just within 2 pips, we had an equal low. And if you look left, I'm still looking at this French election gap in 2017 right around 1.08. If you zoom in, take a look at this price action. What do we have? I just see this large channel that's been dragging out for a year. Here's what I want to see. Given this week with the Fed, if price stays in here, don't be surprised to see a breakout to the upside. Don't be surprised to see a short covering to the upside towards 1.12 or 1.1250. I would love to see a bigger move to the upside. We still have a yearly pivot, in fact, at 1.17, right? But I will take a chance to buy this nice and low and try to run it up to channel highs around 112. That would be anywhere from a 300 to 400 pip opportunity. If it goes even higher than that, now we're talking breakouts and a bigger run and confirmation on the US dollar for weakness. But that hasn't happened yet. We are far from it. So I respect the structure and I respect that this might just consolidate until it is absolutely coiled. And then we see a big spike and then a move up. But just be ready for more bullishness in the short term. I don't see this as a long-term answer. In fact, I do see this recovery to the upside, and then we start to see shorts reemerge around 116 to 118 on the euro dollar. But hopefully, we see some levels that allow this to squeeze and see a dollar weakness coming in here pretty soon. Pound Aussie, I would say a lot of these pound pairs, we can leave them alone for right now. I'm not trying to position trade pound pairs at short term only. That's my focus. Pound CAD has made a nice recovery. We had a ton of volatility on the CAD with gaps. We actually hit our level here. Take a look at this pound. High 66.07. If anybody had the patience to hang on to this trade, look at that giant break to the upside. Gap or no gap, you can still get the heck out of this trade at 6,600. We started accumulating positions down in here. Our break even is around 62.50. And 6,600 is not bad. Get yourself out of this trade. We had lows at 5,900 to 66. That's 700 pips. That's not bad. That's a nice little recovery. That's healthy. Get out of that trade, grab some profit. Okay, pound Swiss, same thing. We're up above 2,300. You notice how it's hitting all my levels. If we get back to 2,250, 2,300, protect, protect, protect. Where are we at right now? We're right there around 2,300, 2,330. So good spot to grab some profit and protect. Pound yen. Broke out of our little yellow box. We had a beautiful double bottom on this trade. I didn't take this one personally. I certainly wish that I would have. That was an excellent double bottom. Even on the breakout of this yellow box, that has been just a great trade for about 400 pips. So there certainly was opportunity on pound yen to take advantage of it. You had to have the confidence and courage to trade the pound pairs number one, trade the yen pairs number two, and go after a fairly high volatility currency pair. So not everybody traded the pound yen, but when you look back at the structure, man, that was a great double bottom. And that's really what I'm mad at myself about missing. Pound New Zealand, look at that big spike to the upside. We're at 1.95. Now I am looking at a chance to sell this around 2,000. Around 2,000. If I can get another sell trade at 2,000, I will welcome that with open arms. And if I get filled at 2,000, then I'm going to go after, in the short term, I'm going to go after this level right here. If I sell it at 2.00, I'm going to go after 1.9300. Now, I'll be watching this structure. If you take a look at our 4-hour or the daily chart, we are on the right-hand side of this corrective channel. So this could be the jump to the upside. We could build off of this resistance and end up selling back down towards 93. We can end up coming back to break these lows. This again is a pair that is known for volatility. It can be a little messy at times, but we'll see what happens. Watch for highs, look at the backside of the trend line, sell high, and protect your profits. So I do see pound Aussie and pound New Zealand going lower in the medium term. I think this is a great trade to consider, but the higher you can sell it, the better it's going to be. So, retesting this high around 9,500, looking left on this chart around 98 to 2,000. Those are good spots where I want to be looking to sell. Pound dollar, also making a nice recovery. We're at 24 and change. I kept saying 2,600, 2,700, protect and get out of this trade, grab some pips. A lot of traders jumped in on the equal low at 2,000. 1.20, now you're sitting on a trade for 400 pips. Great trade. If it goes up any higher, get out of that trade, protect your profit. I think it looks pretty good. All right, New Zealand pairs are on the home stretch here. New Zealand CAD. New Zealand CAD refuses to go anywhere. Equal strength on New Zealand and CAD or equal weakness, one of the two. But I'm trying to buy this thing pretty low and grab some profit on a bit of a correction. I'm going to be patient on this one for right now. Just have a pending buy around 83.50 or so. And I'm watching to basically trade 83.50 to 8,300 on the New Zealand CAD. New Zealand Swiss. I'm holding long on New Zealand Swiss, and I'll continue to look for longs. We did pull back in this yellow box. I am totally okay with that because I'm going to look to buy this thing nice and low. Again, if it's offered. If it's offered, I'll buy it and take the range all the way back up towards 66.50. So I'm still going to remain long with a slight bias for the bulls on New Zealand Swiss. New Zealand Yen. New Zealand Yen. Let me get rid of these fibs for a moment. So that's that one. That's that one. So New Zealand Yen. Looking for some support in here. It just didn't really hold. Let me go to the daily chart. It's a little bit cleaner to see. Daily chart. Lows to highs. We are getting a pullback. We do have a buy trade in at 67.64. I'm still holding that position. We're still up about 100 pips. So any high or low, I'm looking for higher lows to grab some profit. Ideally, I'd love to hold it back towards 73.50. Maybe that's wishful thinking. Maybe this comes all the way back down and revisits the low. Not sure yet. Maybe it's better for me to walk away on this trade. I'll probably let this go for the next 24 hours before I make a decision on it. We'll see if we see let me just look for some bullishness. That's all. I expected a retracement. We had, 6 or 7 days of bullishness in a row. I expected a fall, a little retracement, and we got it. So let's see if we can get this thing to stay bullish overall. New Zealand dollar. This one is falling. Here's the deal. So I'm currently holding around 63.50 on the New Zealand dollar, and I'm also looking at a trade around 62.10. I'm going to hold those. There for a double bottom, there for a huge double bottom. If you look left on a higher time frame, there's just a ton of support around 6,200, and I am looking for this to recover. Coming up with the dollar index and looking for some dollar weakness, this will be a pair that does recover quite nicely. So there's looking left. Previous support around 62, that's why I'm buying low. So I'm just going to be patient in this area. If I can see a price pattern, nice little breakout here, maybe some consolidation, maybe a bit of a falling wedge or a channel, and then we get a nice little push to the upside. If we get this thing to go to the upside, this will be a trade that comes all the way back towards 68 or even 7,000. And we're looking to buy this thing as low as possible. So be on the lookout for the New Zealand dollar to make a recovery. It's probably not all driven by the New Zealand. It's probably driven mostly by the dollar if the dollar decides to weaken. Dollar CAD has had some wild volatility. There it is once again, just refusing to break to the downside. I do have some pending sells on the dollar right around 3,300 and 3,450. So wanting to sell this area, this one could be really messy. Oil is kind of a choppy mess. The dollar index is a choppy mess. But as far as the structure goes, I do like selling this nice and high. If we sell it high, maybe we scalp it. If it goes up a little bit higher, we'll hold it, be a little bit more patient, and we'll grab some pips as we get back down to these lows, or ideally 3,000. That's always a significant and psychological number for the dollar CAD. Dollar Swiss. I hope we have a big sell trade coming on the dollar Swiss. And if we do, take a look. If we have a sell trade coming on dollar Swiss, we're going down towards 97 or even 95.50. If that trade happens, expect the euro dollar to be running aggressively to the upside. So I would welcome this trade with open arms. I don't know if I'm going to trade the dollar Swiss to the downside. This one will probably come back up towards this area. In fact, it might do it exactly this week. Why? Because we have the Fed rate decision on Wednesday. We've got the Swiss franc on Thursday. This could be just choppy, and then decision candle, and then off it goes. And I will say that if we do see a dollar Swiss drop, it's going to be fast, just like it has been in the past. When it drops quickly. When it drops, it drops quickly. When it drops, it drops quickly. When it drops, it drops quickly. Right? You can see that. When it drops quickly. But when it recovers, you can see that it's really slow, really steady, hard to give anything back. But when it drops quickly. So if it does break, look for this to be a sell opportunity on euro or dollar Swiss, and look for euro dollar to go up. That would be the inverse correlation. They tend to play out pretty nicely that way. Again, the common denominator here is dollar weakness. So that's what I'm looking for. Let's see, dollar yen. Dollar yen has dealt with some volatility, but it is still bullish. If we get a pullback here towards 107, I'm looking to buy this. Otherwise, it's been talked about. Double bottoms, higher lows, higher highs. Look to buy this. We've got plenty of recovery space to the upside. Look left, you've got 10900. Look further left, you've got 11100. That's a big gap back in May of 2019. So only about 4 months ago, but that was right before summer trading. I think the JPY could recover. So what does it look like if it does this? Comes back to this high. Well, that to me would look like a structure that gives us a reversal formation, and we end up going higher anyway. So I can see dollar yen building a case for a bullish run back up towards 112. Just a matter of watching to see if you can confirm that price pattern. Dollar peso, probably not doing, I'm not going to do anything in this one. Dollar krone, I'll stay out of this one as well. Let's go dollar index just for another quick review, and then silver, gold, and cryptos. Dollar, you've got previous resistance becoming support. We'll keep a close eye on that one. Let's see, XAG, USD, that is silver. Nice little drop in recovery, but still holding long. I do expect silver to hit $20. It could be, I mean, if we have enough volatility on it, we could see the recovery this week. If it's just a peel away correction. So this high just drifting. Look for this to be a falling wedge of some sort, and then have another run to the upside towards $20. So I'm continuing to hold silver long. Gold, XAUUSD, same thing. We're hanging out right around 1500. 1500 is a big level. 1530 is a big level. Could this continue to correct? Sure. We could correct here, have one more push lower, and then go up from there. I think silver actually is in a better position. Perhaps this does hold these areas, and if it drifts a little bit lower, I'm just trying to look for some structure here that I can buy from. Otherwise, it might just continue to hold and then just work its way higher. I mean, as long as we're getting above 1550, then gold is still bullish. But again, corrections needed. Corrections needed. Previous highs Anything in here, nice little correction into that 1450 to 1400 area. Look for some support to buy. Let's visit cryptos here really quickly. So here is Bitcoin. There we go. Bitcoin just going sideways. Look at how slow this has been. We have major support around 95, 9600. I just think with time, just with time on Bitcoin, we should be making a run to 13.7. If it wants to drop, fine. But we have support at 97, support at 97. If it drops back down there, it does open, of course, bearishness. But I see this as a corrective structure against this larger rally. Remember, this is 3,500 to 13,700. A correction is fine. So if this is a larger swing, we form higher lows. We'll see if the interest is still there to take this up at a later point. But we have been holding this support level very nicely. If it just goes sideways long enough, let's see if we can build a position and look for another rally. I would love to see a weaker dollar rate cuts and allow cryptos to come back and have a great finish to the year. How fun would that be to have 2019 end with Bitcoin and some of those cryptocurrencies back up to the 2017 highs? That'd be pretty awesome. We'll find out. And then Ripple, one more thing, that's XRP USD. Hanging out at the lows right around 26. Major support around 25 cents. This one is more of a, kind of the millennial lottery. If I can hold a position around 26, 27 cents and get back to $3, amazing. If we break the highs and go higher, $6, $7, $10, amazing. Right? Just looking for a big opportunity just to hold and walk away and just set a chart alarm at $3 and see what happens. That's 10 times your money. And then some. All right, so it could be amazing, but it's not happening anytime soon. None of the structure's broken. We've been sideways since the low here back in August 2019. So about a month of consolidation, and it's just getting lower and lower with about maybe 1 cent a movement. So extremely slow there on Ripple. All right, so just one more thing for the dashboard. Let me take a look at Market Watch. Stock markets are open for today. Stocks open lower as oil prices jump in the wake of the attack in Saudi facility. That was a huge cut to production. And that's where you see the big volatility spike. U.S. market opens lower. We're at 0.5% on the Dow, 1/3 1% in the S&P, and 1/3 1% on the Nasdaq. Gold is up, hanging steady at 1,500. Futures market in the red on the day with some high volatility to start the week off. Again, what do we have in the news? Remember, FOMC on Wednesday. Roll that into GDP for the Kiwi. Aussie news on Wednesday night. Thursday, Bank of Japan, Swiss National Bank, and pound. So lots of trading this week, lots of volatility. I'm glad that it's only the middle of the month, so there's still time for us to digest this and get this all figured out. But trades are going well. I feel like I skipped a currency pair. I think I did, and I can't believe I skipped this one. This is the Aussie New Zealand. So we are currently sitting around 10800, which is a huge level. I am going to take some partial profits on this Aussie New Zealand. I'm going to keep a base position built, but I'm going to take some partial profits, and here's why. Number one, this has been a trade that's been ongoing for about 8 months. I've been in it since December 2019. I actually mean December 2018. So I want to protect some profit. I'm up about 4.5% to 5% in my account just in this one pair. To me, that's a decent amount of capital. So I'm going to go ahead and protect some partials there and then also look to get back in. So it might drift to 108. It might drift to 108 and change. I would love, 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 love a correction. I'd love this efficiency to pull back and find some levels back towards 104, 10300. And guess what I'm going to do? I'm just going to level myself back in and I'm going to buy it again. If this comes back up towards, 108, 108.50, 109, it's probably still going to fall anyway. So for traders that are waiting right now, you can protect some profit here. You can close out this trade. We wanted to try to ride this out towards 109 to 109.50, 110 being the ideal round number target. Part of me is kind of fingers crossed that if I scale out for some partial profits, take anywhere from 3-4% of this trade and leave a little position still going, that this level around 108 and that big pocket gets filled, and it does pull back for a correction before we go higher. It does pull back for a correction before we go higher. So what I don't want to see, and this is why I'm opting to protect some profit, is I don't want to see all of this profit for 8 months come back and be, what is a 4 or 5% gain is now nothing. And then I've got to wait for it again. Now, yes, I can build up my position and make it a bigger win, but I would rather take my, 4% here, reload, get another 4% here, reload, get another, I'd rather be active throughout this trade and just, take the trade versus just sitting on it, paying some slightly, negative swap or paying commissions and just not getting anything to show for it. So I'm going to take some partial profits, leave a base position in around 103, 10400, and keep looking to buy that one. I just remembered, pretty sure I skipped that one, so there it is. One last thing for me. I appreciate all new followers, Instagram, Twitter, Facebook. You can send me messages on any of them. I'm checking the apps, pretty regularly. I try to keep all the videos. I know this is 40 minutes long. I appreciate everyone from watching start to finish. I obviously try to keep the videos nice and informative and actionable. It's not super time sensitive. These are trades I'm setting up for my week. These are trades that I'm setting up for my portfolio. This is what I do. So I enjoy it. If you need to get a hold of me, these are outlets: Instagram, Twitter, Facebook, YouTube. My email, this actually is cpulver@markettraders.com. I will respond to any of them. If you're interested in joining me for live sessions or webinars, let me know how I can help. And have a great day and have a great week, everybody. It's going to be a busy one, so I'm looking forward to it. Take care. Bye.